Hello traders and welcome to a new video on different methods to trade. A lot of my videos have been strategy and tactic based, so looking at different ways to approach the market, different ways for analysis. But what I want to look at in today's video is something that I don't think I have ever talked about yet, except in my price action volume guide, which is different ways to actually execute, different ways to trade the market, whether it's position based or order based. So I'm planning for this to be a shorter video. I'm hoping this is under like 10 minutes. Fingers crossed. I mean, by looking at the length of this video at this point, you probably already know if it's under 10 minutes or not. We will see. But this is going to show a few different ways that you can trade that are not the typical way to do so. So to begin, I do have a 30% discount on my price action volume guide. And within this guide, I offer examples of how to trade differently. So if you want to learn more how to trade order-based trading instead of just regular position-based trading, you can get the guide and learn how to do so. And I'm going to be covering a little bit of ground that's similar to what I cover in the price action volume guide, but I'm not going to be talking about the actual content of what is in the guide because you'd have to read it yourself. Okay, let's just first look at the traditional method of trading. Let's look at then a different kind of trading, order-based trading. We're going to look at visual examples, and then we're going to look at a live setup of how we can actually use these strategies in the market, real time. Okay, position-based trading. You've done your analysis. You look at MDR, you look at BAS, you look at order depth, or you look at, RSI, MFI, volume profile, volume spikes, whatever analysis you have, and you're bullish. So you market buy or you limit buy on a supply rundown and you establish a long position. Very common, very normal. Let's say you're trading futures on BitMEX and you're very bearish and you think that it's a good time to short. Your analysis says so, price goes up a bit, so you limit sell and you enter into a short position. This is just position-based trading. You're just taking a bet based on where price will go in the time frame that you choose. So if you're scalping, you're looking for price to follow your direction within the next few hours or less. If you're swing trading, you're looking for maybe a day or two, and longer term setups, you're looking for the trade to go your way in a few days. Very common way, and typically you're either going to not set a stop loss and take profit. I do not recommend this. You just hop into a position and see where it goes, or the more common and very traditional way is you set a stop loss, you set a take profit, and if you can only set one, you set a stop loss. And if you reach your profit target, then you cancel your stop loss and you decide to take profit. This is really, I think, on my channel, a lot of the strategies that I talk about really cater to this kind of style of trading. But I do want to show an alternate way of trading because I really do believe, and I've said this many times in my videos, that if you do what others do in the market, you'll probably receive the same results that others receive. I mean, and we all know what the majority of traders, the majority of traders will receive. It's going to be a loss. So the way to avoid receiving the results that others receive is to do things that others typically don't do, to look at things that others typically don't look at so that you can get an edge that others don't have. And this is where order-based trading comes into play. Order-based trading, you are not looking for a bullish or bearish movement. You're looking for high probability reversal zones or high probability continuation zones. What does that mean? Well, let's say you identify a support point or any kind of high probability reversal zone. So you set a buy limit order below price or very much below price, maybe like 1.5% below price. Do not use an arbitrary number for this. That's not a good idea. What you're doing is you're looking for the price action, the volume, volume profile, other kinds of metrics, and then you set your buy limit order. And then you just wait for price to reach that point. So you're actually not long because your buy limit order hasn't been filled yet. So the good news is if price does go down and touches your order, you could get filled at a very good price and then, achieve profit on a bounce back upward. The bad news is price could just go up without you. Price could just not make that move down and just move up without you. But the good news about order-based trading is that you're not really long or short. You really just set orders based on high probability reversal zones. So what you could do even is set both a buy limit order and a sell limit order. So a sell limit order at a price, that you believe will be a really good reversal zone, a buy limit order below price that you think will be a good reversal zone, so that whatever gets hit, it doesn't really matter. Both are high probability. And they will put you into a high probability bounce zone. And of course, you set a stop loss as well that goes just beyond that order. This is more order-based trading, and I have found when I try order-based trading or position-based trading, I feel a lot more rational, less emotional when I do order-based trading. Position-based trading, you're in a position, your profit or loss is either going up or down within minutes. Order-based trading, if price comes within 0.5% of your order, okay, fine. If price fills your order, okay, fine, as long as it's not, super high volatility that blasts past it. Just for me, I find I'm a little bit calmer when I'm making this kind of trade. Now, the alternate setup of this isn't just using limit orders. You can also use stop orders. And a stop order, guys, is when you set a condition that if the market reaches a certain point, you use a market order to enter. So if I use a buy stop order on Binance for BNB BTC, when price reaches that point, it market buys for me. And what you could do is you could look for a high probability continuation move. So if you find a certain price point and say, hey, if price crosses this threshold, I think that we're really likely just to keep going up. Then you could set a buy stop for that price area. So that if price does reach there, you enter long, and hopefully you get the profit. So I think you guys can begin to see where I am going with this. Really, the two different kinds of trading, order-based trading and position-based trading. And I would say that at least 90%, probably higher, are going to be thinking more along lines of position-based, of just, do I go long or short here? Price moves up or down. Do I go long or short? Price moves down. Do I go long or short? That kind of thing. This is something that's playing off of probabilities and very likely reversals. So let's take a look at this chart here, and let's do two things really. Let's apply a position-based mindset, and then let's also apply a order-based mindset. Position-based. You're bearish. You short at 5150.5. You set your stop loss, you set your take profit, and boom. And price makes this kinds of action. Do recall you shorted here. So potentially you took profit here, potentially you took profit, on this down spike here. Maybe you got stopped out here with this kind of stop loss hunt move. But there's opportunities to take profit down here, and there's also opportunities that you could have lost, but you shorted there and you entered a position. Okay, let's take that same chart. Now this time, you're not bullish or bearish. You don't really care about what happens here, but what you do care about is you believe that, guess what? Price consolidated a bit here, price consolidated a bit here, and price certainly consolidated a bit here. So that's traders showing interest. Now, because traders showed interest at these price levels, perhaps when price goes back down to those levels, previous resistance could become future support, and trader interest could pick up, leading to a reversal. So here's what you do. You set a 51.15 and a 51.10, two limit orders, let's say, just for the sake of argument, 10,000 contracts apiece with total potential position size of 20,000 contracts on BitMEX. And then you set a stop loss maybe right below, this is not the best place to place a stop loss, but let's say you place a stop loss, at like 50.80. Okay, here's what happened. Your analysis was correct. This was actually a very good point of consolidation that traders did show interest at. Price goes back down to that level. And then quickly buyers push it right back up. You get filled at beautiful levels, and you have plenty of opportunity to profit and almost no opportunity to take a loss. It's going to be near impossible for you to take a loss here because price was only below you for 1 minute, if that, and then you were in profit. So look, guys, I know that this is a hand-picked example. Of course, I knew what had happened. That's why I picked this example. But don't focus on the chart and the price and the volume here. Focus on the method of trading and the method of mindset that completely changes these kinds of the way that we approach the charts. In this way, in the first way here, when we short here, we're going to be in drawdown, we're going to be in profit, and we're really just betting. We're hoping that the market goes down within our time frame. Here, we're not really hoping that the market goes down. We want the market to go down to fill our orders, but if the market goes up, we lose nothing. Except opportunity cost, the loss and opportunity of not going long. But there's really no harm if price doesn't fill us. The only harm that can happen is if price blasts past our buy limits and we hit a loss. Guys, I'm not saying that order-based trading is, okay, this is over 10 minutes already. Lovely. I'm not saying that order-based trading is better than position-based. Of course it's not. But it does offer you some advantages that, that position-based trading doesn't really. You get to set the terms, and it's kind of I think there was a Sun Tzu quote that said, basically, it's better for the enemy to come to you than for you to go to the enemy, something like that. And basically, better for the chart to come to you, better for price to come to you, to your orders, than for you to try to go to price, for you to try to enter position at the price just because it's the current price. And I think that Sun Tzu would be a pretty good trader. So let's go take a look at a live example of position-based trading versus order-based trading on BitMEX 5-minute. Now, I'm not looking at any additional indicators here. I'm just looking at this chart. Now, the first thing is, maybe I could think, okay, looking here, it looks like we have had a good amount of consolidation. And let's say that just for whatever reason, I place a sell stop order here. So that means that if the price, I'm going to paint this red just to make it a little bit cleaner. Let's say I believe, hey, if price goes to 54.85, price is likely to keep going down. I want my market sell to be here, so my sell stop. Additionally, let's say that I believe, I'm actually pretty bearish. So I think that I want to actually also place a limit sell order here. So remember that, and I'm going to place that, right just about at resistance. Perfect. So remember, this is going to be a limit sell, and this is a sell stop. So then this is not position-based trading. This is order-based trading where I am not in a position yet. And let's clarify, stop losses, of course. I would put my stop loss maybe here, meaning that, make that black, meaning that if price does fill my order, my stop loss is here for that. And if price fills this order, we'll immediately place a stop loss. So let's see what happens. So here you can see price fill the order, and beautiful, lots of volatility for us to profit off of, and we are currently in profit on that. And let's say we decide to hold the position, or we can take profit, but let's say we decide to hold the position. And beautiful, price goes back down. And let's say then we believe, okay, we take profit. So then our first profit here would be, about a good 0.89%. So that was just an example of order-based trading. I just believed that if price had gone below here, that this wouldn't really be a stop loss hunt, that this would be more of a high volume, high volatility continuation down move. So we profited off that. Now let's do a position-based. So what I'm doing here is I'm forcing myself to either buy or sell at the market price. Again, I'm not saying this is good or bad, but I'm just waiting for price to go to a certain level that I would deem a good opportunity, and then I would attack it. So let's say, we're hitting support here. It's about to buy, but I can't buy now. Can't establish my long position there. On a pullback, maybe if we can go round back to there to pick up some liquidity. Come on, price. Go to a more interesting area than this flat consolidation, please. I feel like it's just going to go high volatility one way or the other, though. Yeah, that's a bit of high volatility there. Okay, so then let's say that I'm like, you know what? This looks pretty bearish. I'm short. I'm not going to use position-based trading. I just short there. Let's see how that would have gone. Yeah, so we do have some opportunities to profit. Okay, and then we probably just took a loss there. Well, hopefully we didn't take a loss because that was actually a pretty darn good short. Did my seat just minimize? Okay. I think I just lost 4 inches of height. Okay, that's better. It's like when you push the lower part of the seat and then the seat goes down. Yeah, okay, never mind. It's not that interesting. I found it interesting though. But yeah, what is interesting is that we made dang good profit on that. I think this was the 8% drop that occurred a few days ago, so I picked a good time to sell short there. So that would be an example of really position based. And then, so both of these hypothetical trades would have worked out really well. Then let's take an example of order based. One thing I could do is look for spots of consolidation. So previous consolidation's a really nice way to place limit orders at. So let's say I look here. And guys, I see that there's a good amount of consolidation here. So I believe that if price goes down there, I would like to buy. Awesome. That is a terrible color. Let's make that a little bit darker green, please. Okay, thank you. Now it's basically black, but whatever. Okay, so if price goes down to here at 50.94, we buy. So filled and, oh Lord. Okay, well, That'd be like a 1% drawdown. But yeah, it looks like we're in profit now. We're a little bit in profit town. And then I'm gonna put my stop loss. Let's say I put my stop loss there. That's probably where everyone else's stop loss is too. And it probably will get hunted, but okay, yeah, we profited. So then I take profit there. So that would have just been an example of position of order-based trading. Now, how did I come to that decision, guys, to buy it here? Well, what I did was I looked for previous spots of consolidation where traders had shown interest, and then I put my limit orders based on those spots of consolidation. Other examples of that occurring, yeah, I'm looking back at time, so I do know the answers for this one. But I mean, there's plenty of examples of previous consolidation becoming really good order entries, and this is one example for sure. Price goes up, right? Price is consolidating above a previous point of consolidation. Let's say I throw on, we don't know this information yet. Well, I do, but pretend we don't. So I set a buy limit there, and I set a buy limit there, and I say, hey, you know what? Traders showed significant interest at these levels. I think that it's going to be hard to breach. Great. One of our orders gets filled, and we are in profit. Okay? Now, I'm not saying that every single time that you see consolidation, you want to put a buy limit or a sell limit, based on if it's above or below price. There are times where you may actually want to use order-based trading to put sell stops right below price, to get filled on something like that. And really what I want to stress with this video, and the key takeaway of this, isn't really what I've shown, but really be creative, guys. I mean, so many traders, I think, just fall prey to doing the same things that every other trader does. And a lot of the teachers, a lot of the people who make videos, who make articles, are just going to show the same kinds of things that everyone else shows because, in finance, I don't think creativity is really, the number one thing. It's not like art where, creativity may trump profitability, but in finance, profitability definitely trumps creativity. But be creative. Don't be afraid to, cliche, but think outside the box because, it's the traders who I think who think outside the box and who say, you know what, a lot of times I'm just buying or selling based on whether I believe it's going to go up or down, just position style. Let's try something different. Let me actually look for spots that, I think that are going to be high probability reversals up or down. And not only that, but let me look for spots that are probably going to be high probability continuation moves. So, I see that we see a lot of touches of support here. I put my sell stop right here because I think that if we breach this level of support, touched many times, the price is just going to dump. Had you done that, I mean, that would have been a beautiful, beautiful, beautiful short. Or, you could say, I think that if price goes back up to these points of consolidation, that they're going to likely act as resistance, and that would have been a beautiful short as well. This is more of the order-based mindset. And if you are interested in learning more, we do have the guide that's on sale that also comes with access to the private professional day trading group as well. Hope you guys enjoyed the video. If you guys have any other questions or qualms or concerns or whatever, you can message me on Discord, message me here on YouTube, and also put forth theories of any other creative or alternate ways that we can execute. Not different ways that we can use analysis, because I talk about that all the time, but different ways that you can actually trade. Because there are a lot of different ways to trade that are pretty cool that aren't typically talked about. So with that, be creative and see you guys next time. Happy trading.